Welcome to Housing Data Nerds, where I break down some data for you and help you understand it so you can see how it can affect the United States real estate market. And today we're going to be talking about Canada and how it can possibly hurt some areas even more. Let's pay attention to this one. I'm Tristan. I run a real estate team out here in California. Also have a brokerage that's expanding into everywhere in the United States. And I've been in business here for 21 years. Let's break down some real estate. Let's start with a great article I've got here for you from Redfin. You can take a look at here. It says 26% fewer Canadians are searching for homes in the United States than last year. But what does that really even mean? Well, it means that if they are searching for less and less homes, because they're just not interested right now, that could affect certain areas more than others. Here is the short breakdown for you. Canadians searching for homes in the U.S. destinations started declining significantly in February when the White House implemented 25% tariffs on imports from Canada and Mexico. The drop was especially steep in April. You can see here, this is the norm, going up or down a little bit, but wow, what a drop, right? Negative 21, negative 24, negative 34, up a little bit 26. June's numbers haven't been out yet, but I can tell you it's probably going to stay in the 20s. Why? Because the world's paying attention to what's happening here in the United States, and some of them are angry with the tariff. Some of it creates a bigger challenge for, specifically here, Canadians coming into the United States, because the Canadian dollar is already lower than what the US dollar is, so they can purchase less. And this friction is causing a lot of Canadians to second guess whether or not they're coming in, and not just Canadians. You're also watching some other foreign countries in Europe, in China, and in other places coming in and saying, well, maybe we shouldn't buy a second home in the United States. Maybe we shouldn't even go and visit, right? Because you're watching in the media how they're portraying the United States, not only with tariffs, but also the immigration challenges that we're having. And so you take a look at what Canada is looking at. Let's get some specifics here. And this I like right here. Let me zoom in for you so you can take a look a little bit better. Fewer Canadians are searching, let me go to the left, searching in American second home destinations. Year over year change. I want to show you the bottom here. You've got on the left, Riverside, Palm Springs, Phoenix, and Miami. Those are the three that they chose. And I want to share with you one thing from those areas. Those three areas, Florida more in general, and I know Texas is not on there, but these areas have a lot of new construction. And when you start pairing countries not wanting to come in and purchase homes in these areas, regardless of why, and you add on top of that all of the new inventory coming out from builders, you start having a situation where prices start coming down even more than the normal. And that's what you're watching in some of these areas. This is why it's really important to take a look at what other countries are not coming in and purchasing property, because it all starts with the search. This is why the search is so important, right? So let's take a look at this. We've got January, which we saw earlier, the darker blue, right? Already low coming in, right? Low, negative 9, negative 12, negative 7. But then it shoots up, right? Not only does it shoot a little bit, it shoots up significantly in these areas. And I want to get into some details here, because Metro Level Summary, Canada-based Redfin user search in U.S. Remember, this is just Canada. It's crazy to even take a look at the other countries, what they're doing. You've got this alphabetical. We're taking a look at the negative. There are some positives, like you see Austin, and I believe Indianapolis. When we scroll down, you'll see they had a positive number, but the majority of them are big negatives. Anaheim, negative 28%. Atlanta, Boston, negative 27%. Chicago and Cincinnati, very important because they're right next to Canada, so you have a lot more people coming into those. That's a significant drop into coming into the U.S. Dallas, Denver, Detroit, right now, more Florida, more Texas, right? That's a big drop. Remember I told you Indianapolis is a plus? Well, there you go, plus. But Kansas City, Las Vegas, even Los Angeles, or where I'm at, that's why I said even Los Angeles, right? So this is all across the board. And if we take a look at pending sales, I want to show you something. You've got pending sales right here and new listings. And you have to watch out for both, right? Because pending sales, I want you to see on the right over here. On the right, it's important to take a look at pending sales because this is what really determines where we're heading. How many properties that are on the market are going under contract? And you've got a drop here in Vegas, where you also saw on the previous screen where I showed you, there's less searches in those areas. And on top of that, Vegas has new construction. What else? Orlando, right? Not only do they have a new construction surge for years, but there's less search in Orlando and you've got negative pending sales all across Houston as well, Texas, right? Not so much San Jose. They're just having a drop. They don't have a lot of new construction, but Tampa. And you have to start watching which one of these areas also has more new listings popping up. Well, catching on, because look at this, Tampa, Florida, and Orlando, and Riverside, and Jacksonville, all are starting to have less new listings pop up because sellers are realizing that demand is not there. In fact, there's also a pullback from sellers saying, hey, you know what? We're not getting the price what we want. So we're going to start now taking our homes off the market and we're just going to wait. And a lot of these sellers still have that low rate, like below 5%, below 4%, where they're like, hey, we don't need to. And so you have to start watching the markets this way. The important thing is this: what countries are going to be coming in and purchasing less second homes, and how many of these countries? And then we have to pair that with new construction. Where in the United States do we see more new construction? And then is inventory declining or going up in those areas? Because then ultimately that means prices will continue to drop faster or at a slower pace. Watch for those areas because these pieces matter a lot. Thanks for watching today. It was a short one. Have an awesome day.